we're not scared of 1975. I'm going to look at it and feel like I'm going to get rewarded from a cap rate in the future by doing it. Because people are like, why are you spending the money when it doesn't have the instant ROI? Because people are just paying attention to unit turns and top line.
Yeah.
We're paying attention to cap rate compression by banks.
Yeah.
Rewarding you for doing the CapEx that people aren't doing.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, John Cohen. How we doing?
Today we're bad. Today we're doing bad. We're fielding investing calls, giving bad news on webinars, getting kicked in the teeth with lenders. This is the first time I've said we are bad.
We've had one or two rough days.
Had some rough days.
We're definitely more positive than negative.
It's real estate. Sure. Come on.
Yeah, today is just not. This one, I'm hoping the clock strikes whatever it strikes and I can leave.
Yeah, exactly.
Go home.
We'll make it quick then.
Yeah.
But got a great guest in today, a guy we know pretty well. Done our meetup, done a bunch of stuff. I'm so excited to have him in. I'm going to let him introduce himself. But Chris, thanks for joining us.
Thank you for having me.
Yeah. So can you take a minute, 2 minutes, 5 minutes, just tell people who you are, where you're from, background, how you got into this game and what you're working on?
Yep. Chris Jackson, Sharpline Equity, have about 300 units now, mainly focused on multifamily in the Southeast. Our largest property is 174 units, but we are doing a flip right now in Augusta, 96 units, and have about 500 unit experience. But I got my start in tech. I was a programmer, and I hid behind the computer for a very long time, and then I figured out that I had something inside of me that was going to be a real estate investor, that I could do it, and then I pushed through and did it.
Awesome. So give us a little bit of a reference of timeline. How long were you in tech? When did you start real estate? Sure. What's that whole journey been like? Just a little bit more reference for everybody.
Sure. 21 years old. I wanted to be a real estate investor. And for 10 years, I got the Carlton Sheets books and everything like that. And for about 10 years, I thought about being a real estate investor and didn't do anything.
Nice.
And then 10 years ago, because I'm 44 now, I got my first small multifamilies, did those, and then moved up into some flips, which were a bad idea. Don't like flips. I've lent money, done wholesaling, which is cool. And then started about 5 years ago getting into the syndication game slowly.
Yeah. So I think that's really interesting because a lot of people I think that we have on and we talk to don't necessarily go through as many different asset classes until they've found their footing. So can you talk to us a little bit about like how you picked one, why you picked that one, and then kind of your process going from one to the other? Like, why did you go from this one to that one? What made you eventually decide to leave that, and just kind of talk through that whole process a little bit?
So I knew I wanted to get into commercial multifamily because I wanted to control value with NOI and the tips and tricks that you can do that you have within your control. So I get into small multifamily. I then I saw a 5 unit, then an 8 unit, and I realized I had to become a landlord and figure out how to be good at it. So for about a year or two, I realized that I was sucking at it.
Yeah.
And I had to get good at it. So what I started to do in that time was, maybe flips are easier. And, did a couple flips, got into wholesaling. I like the tech piece of wholesaling where it's more transactional. But then after you do it a couple times, I realized this isn't how you build wealth. Got back into realizing that I was getting better as a landlord. And how do you go bigger? And that's when I got hooked up with Chris Urso. And that's how John and I met. But I went through that journey of learning the sophisticated syndication and figured out how to raise money correctly and buy the right deals and be an operator.
Yeah. So did you maintain that 5 and/or 8 unit throughout the entire flip and wholesaling process?
Yes, I just sold the 5 and 8 unit last year.
Okay. And while you were doing that, was it just over time, just learn how to do it better? Was it got better tenants? Did the flipping and wholesaling business help you figure that out? Like, what was that whole?
I think the flipping and wholesaling just made me realize where I wanted to put my energy.
Okay.
And I started to realize that I was good on the phone with sellers. So that gave me more confidence to go and start doing bigger deals and start raising money. So it was really just a feeder of confidence and repetition, like putting in the reps.
Yeah. No, I hear you. I think that's a big practice. I know, for myself, because I started out trying to flip homes and then tried to do the tax deeds that John had done, and then eventually moved into small multifamily, and then came here and started doing the big multifamily. It was very similar. It was like kind of quickly realized from one to the other that it was like, hey, this isn't going to work. This isn't going to work. This isn't going to work. And for various reasons. And, the aspect of trying it, I think, gave me a little bit of a better basis of, real estate in general, which I think is interesting, because we had, a couple guys on, was it last episode or 2 episodes ago, that were just bought land and have just done land for 20 years. And it's
like flip land or
land flipping.
Yeah,
and
land flipping, financing, all that stuff.
And there's nothing wrong with that, because they're going to have a very, deep understanding of it.
Right.
I'm curious how much of a broader understanding they have of like other assets and aspects. And I think you can pick it up just from talking to other people. But
so I had a call today, and that was what shocked me was we have an investor who's, he's invested in one of our deals, and he's calling me with questions that I look at, and I'm like, that is not like people. I almost wanted to hang up the phone and be like, there's so many uneducated people out here. It's scary because there are people that, like you said, like whether you did land, whether you did wholesaling, what a small multifamily, large multifamily, mobile home parks, whatever it is, some people get so infatuated in one thing and they can't think outside the box, or they have no idea, like, oh, how do you find out if something's not going right? Well, like that's, you're either going to know or you're not going to know, and you're going to know too late. But
well, I think there's also a lot of people that are in a lot of the business, a lot of the asset classes, especially multifamily, are hiding behind spreadsheets.
So that's I told him on the phone. I said his exact question was, how do you get that repairs and maintenance unit? I was told it should have been this. I'm like, that's not. Just go do it. Then you'll really learn what the repairs and maintenance number is, because it's not $250. And he's like, well, your CapEx below the line. Like, do you just spend that money wherever you want? I was like, no. The bank's going to take part of that. They reserve per month. It's not like you could just do whatever you want to do, and your spreadsheet's only going to show you this snapshot.
Sure.
It
also fluctuates.
So at the end of the conversation, I said, listen, I budgeted $500 a door in repair and maintenance. Could it be $600? Absolutely.
You could have 3 months of $800, and then all of a sudden you did the right work and the right CapEx, and then you're down to $300, and you average out.
Just because I put in $1,100 for this doesn't mean it might be, $1,200. It might be $1,300, but this number might be lower. I said, those numbers are not set in stone. If you miss, it's over. I said, this is a bad way to put it, but you rob from Peter and pay Paul. It's just, if your water bill is your water bill, if it's a little bit lower than you expected, that's great. That money can go towards this. So it's not set in stone. And that's what all the books teach you, is use this number. But that doesn't work that way. And that's the thing that.
And you can overdo your number too. Like if you based on the asset class, if it's an A class that's been built right and not like the wrong type of PECs, like you can have very low R&M. So if you use 500, you're like, how come I'm not getting this deal?
Exactly. Yeah, you're off. But that's the thing that I think most people don't. They want to hide behind a spreadsheet and or blame the spreadsheet for not doing things. When I know Chris and I know your partner also was on our podcast early episode. Don't know which one, but you guys have done, like I said, 5 unit, 8 unit, a bunch of single family stuff, multifamily, small multifamily, larger multifamily, but. Now you found your groove, and it's only 300. And I could tell from experience and knowing Chris, it's 300 with a shit ton more experience than just 300 units that they're working on. I mean,
we sold about 100. We have about 500 unit experience, but it's more about 5 full cycle multifamily deals. Yeah, from finding the deal, raising the money, running the deal, executing the business plan, and then ultimately disposition, return of capital, and return.
You gotta change up your introduction.
Yeah, but your introduction made you seem like you've never done this before, and I wanted to be like, whoa, no. It's Chris is one of the guys, and when we, it's hey, you free? He'll call me. He's like, I have to complain about a lender. Have you ever had this? Have you had this problem? But no, you guys come in with significantly, a much more well-vetted operator, sponsor than most.
Well, right, because right now it's very easy. Also, it's the unit count game. So, yeah, I mean, that's why, to me, that doesn't matter. Like, I know my experience, and our investors know our experience, but, like, unit count is really actually not even meaningful to me at all.
It's completely irrelevant. I said it. I've said it on this show numerous times. The 2 deals we're closing now, we put a new page in our book and it showed like 4,500 units. That fucking page like blew open the doors. People were so impressed by that. I'm like, guys, that means nothing. It doesn't mean anything. Okay, yes, it's nice to look at it on paper, and I'm not trying to downplay anything we've done, but that, that doesn't necessarily, it's, the fastest to 1,000 wins. No, that's not the case. Fastest to 5,000. It's irrelevant. I know sponsors out there that have done tens and thousands of deals and they are dumber today and they're doing shit that they should not do. I know guys that are buying deals sight unseen because one of their students sent them a deal.
Yeah.
And they're buying deals. They're just buying them.
Well, also because they have the prowess of the large unit count. There's a lot of money coming from various asset management fees. So it feels like it can be looser when it shouldn't.
Exactly.
I do think part of it, though, is it's not just 4,500 units. It was 4,500 units and 8 deals sold.
Well, yeah, no.
Correct.
I think that was probably also a big part. It wasn't like, hey, we've bought 4,500 units and we haven't sold anything. I think that's...
Right, you have full cycle. And also the biggest piece...
That's where I was saying with you got to update your intro. It's... Hey,
full cycle.
Acquired 500, we've sold off this many, and we've hit this return. That's significantly better. Than we managed 300.
No, but full cycle is important because that's what I get all the time. And you're right. It was wow, that's a lot. But how have you done so many transactions in this period of time? And it's, maybe that deal. I mean, I know for a fact we sold a deal that if we would have held it longer, probably would have returned more money. But at that time, at that snapshot in time, it made no sense to hold it.
Because you have a fiduciary responsibility to your investors when you're looking forward and you're grabbing a 5-year IRR hit in the second year.
That's it. You're hitting your number now. That's what you told people. Deliver it. Yes. Monday morning quarterback, right? Mm-hmm. The first deal I ever bought is sold for 2.7. I sold it at 1.8.
Right.
3 years later, but it didn't mean it had to go that way. Very well could have been looking backwards and said, "Oh shit, should have sold that deal." And now we're underwater here, over leveraged here. But that's where we've I wouldn't do anything different that I've done. I'd sold every deal. I might even sell deals that we sold at lower prices if we got those offers or when they came in. But I have no, that I would say that's what people were more impressed with was execution, because there's a lot of people out there now that are doing deals. I see on Facebook all the time, 17 people come together, stand in front of one of their signs of a deal they bought. And I'm like, this is crazy.
And a lot of those people also will not even know what's going on in the deal. Yeah. And that's why I have a respect for you guys, because it's your operators and why you guys respect us, because we're operators. There aren't a lot of operators out there. Yeah. Like most GPs out there don't even really know what's going on in the deal. It's really passive GP-ness.
Well, that's a good way to put it. And it's so scary. Like there's that new whatever that challenge is where it's like Tinder, Facebook, Instagram, and whatever.
You're way off.
Whatever the hell it is. whatever that challenge is, I want to do like real sponsor, fake sponsor, show the real pictures. And one of the pictures be 84 people standing in front of a sign on a deal that they're co-sponsors on. But meanwhile, the real sponsor's not even in the picture. He's too busy doing the work.
Yeah. I think it's tough because I think there's been a large, push behind, hey, it's, leverage other people's money, and syndication is a great way to do it.
Yes.
And I think there's an oversell of how much is actually required from not even just a knowledge perspective, but also a capital perspective to go and do this. It's not like wholesaling a deal where you really don't need the money to close the deal. You just have the You should, if you're going to buy a deal for 100 and you're going to sell to somebody for 120, you should have that 100 to close the deal. Technically, you don't have to, though. If you want to go get a $10 million loan, you need the net worth and the liquidity requirements for that loan.
Sure.
So it's like, me personally, I can't go out and get a $10 million loan. I could not myself go out and buy any of the deals that we buy because I'm not there yet.
But you know how to architect your relationships to accomplish that without selling it to 50 people to make up that net worth of liquidity requirements.
Exactly. That's where I think where it used to be, the feeling I guess used to be was, hey, if you don't have it, go find one balance sheet partner to go do it. One co-GP to go get that deal done, because, I could have, if I've been doing this for 10 years, I probably still won't be able to take out a $20 million loan by myself.
Most people cannot. That's why their partnerships exist.
Exactly.
Correct partnerships.
Exactly. But now it's the stage where people are, because there's so much capital out there to just raise over different online sources and stuff, where you get the $25,000, $50,000 investor that a lot of people are capable to raise $200,000 to $1 million at a clip. It's really not that hard if you put in a couple years worth of work. Probably anybody can do it. If you just said, hey, for the next 3 years, I'm just going to tell every person I meet, I raise money for multifamily syndication. Here's the benefits. You'll raise money over 3 years with no experience.
Yes.
Because people just, right now where the economy is, people have money. But if you're trying to raise $12 million for a $30 million loan, now you need 12 people or more to raise $1 million each and qualify for that loan. That's where it gets convoluted. It's not, nobody's going out there and, 3 people aren't getting together and buying a 70 unit property in Georgia or anything like that. They're getting 14 people together to buy a 400 unit property in Texas for $45 million. And that's where I think it's gotten crazy.
Yeah, but like, and it's gotten crazy because, like, for me, like, think about the banking perspective of that, right? That would have never flown 8 years ago.
No.
No way. But now it's like, wow, if this market's going to collapse, I got fucking 14 people on the hook. It's like, I may get some money back. But the scary thing is, like you said, is like, partnerships are hard enough to manage the day-to-day responsibilities between partners. You put 14 decision makers into a situation. If everything goes great, of course no one's going to have a problem.
Yeah, the first dinner and the closing, everybody's happy, and then when people aren't living up to their obligations, that's when it gets interesting.
Yeah, and that's the part.
And the property suffers.
Exactly, the property suffers. If I raised $1 million and you raised $2 million, you raised $4 million. I raised $1 million. I don't really care anymore. Whatever. My investor calls you. He's pissed, and that's when it snowballs out of control. But it's. I don't even know what it is, but it's not. I don't want to say it's scary because there's still so many deals out there to be had, and there's people doing partnerships with 15 people, and they're the best partnerships in the world. But it's crazy when that's the norm now. It's like,
it's uneducated and too many people.
Yes,
I'm really curious because I obviously got into real estate now 4 years ago, syndication 3.5 years ago, maybe a little bit less. What was it like before Instagram and Facebook were popular? I'm really curious what partnerships, and I don't know. If
you mean like 10 years ago?
10, 15.
Yeah, I mean, it was like, this is the beauty of syndication, though, is because like information got available to people like us so that we could access this great asset class with friends and family that could never take part in a 50, 100 unit. But usually it was done in the past with the doctor, the lawyer, and the builder at the country club, and they all threw in $1 million. And the lawyer drafted it up because he knew what to do.
And the builder built it.
Yeah,
or the builder operated it. And that's where it came together. But I know, like, from my standpoint, when I left the financial world and I came onto this side of the coin, it was 2012, give or take. Now, I had some real estate that I owned personally, but I left that job because I wanted to raise money. I wanted to just pick up the phone, cold call people, raise money for real estate because I liked real estate. My dad was an attorney at the time, and it's before the Jobs Act and before any of that stuff. He said, yeah, blue sky laws, you can't just pick up the phone and call people. So 8 years ago, it was done like that. Now, there was full-blown syndications, but if I go on Instagram now.
It was a different filing. It was more the funds, the Reg A, right?
It's your normal.
It would be like that would be like a JV.
It would be correct. It'd be like a JV or an operating agreement, or hey guys,
it would be a true partnership.
It'd be a partnership.
Yeah.
Now you go on Instagram, and the first 19 posts I scroll through, it's 18 different syndicators. We got one guy who's buying deals all over, saying that I do this and I buy deals for $5 million, they're worth $10 million the day I close, and I refinance, and I'm sitting there, I'm like, that guy's going to jail. I just scroll through it and fucking it's
instant equity, $3 million instant equity.
Sometimes I look at these people and I'm like, this guy's got 100,000 followers. That's dangerous. That's like I don't want to say criminal because he just could be finding the best deals, right? But I mean, I've seen, a guy buying a 3 unit and then a 275 unit, like within 3 days of each other. And I'm like, this one's in Louisiana, this one's in Georgia. Who's operating these things? How are these things going down? And lending, raising money, but I don't know the answer to that question. Like 10 years ago, 15 years ago, 20 years ago, multifamily's been around forever, right? Yeah. Their buildings, we buy deals that are 1960s built.
Sure.
That deal was owned either by an individual or in these little partnerships. And, all social media and the internet has done is made that readily available for people. We timed it really well. I tell people that all the time. I picked a great time to start. I wish I had picked like 3-4 years prior.
Yeah, and I wish I went as fast as you. You went.
But it is. I don't know. I mean, it's prior to all of this stuff, what happened? I don't think there was 18 people coming together to do deals.
No, I don't.
25 years ago, I think it was like 10.
Yeah,
9 LPs, one
maybe for very big assets, but I think it was done at a more sophisticated Wall Street level.
Correct. Taking that product out, like a Goldman Sachs, or
right. They have like 7-8 different companies, or and a few high net worth people that are LPs, and that was the syndication. It was done correctly. Yeah, but I think that's how it was done. I mean, that's what we learned from Chris. I think Chris was like a really a pioneer in doing it. Like new school way.
Yeah, no, I agree. And he also did it right. It was very, very structured. Right. I think there are so many people out there that are selling promises.
Yes.
And they're dangerous promises. I also think there are people doing a really, really, really good job at it. Yeah. But I also think people are, I know that who's the godfather of this business, Dave Lindahl, right? Like that's sort of like he was like the first guy. Yeah. And they're spinoffs off him. But, he was one of the first people putting it together.
But was he teaching, was Lindahl teaching syndication at a sophisticated level? Or was he like, this is a tool you can use?
I think he was more or less, I know his original books are teaching multifamily investing.
Correct.
Not necessarily syndicating a multifamily project. It was more along the lines of, the first thing I ever saw from Dave Lindahl is probably right around that 2012 period. It was direct mailing, 3-family buildings in like not planned communities, but like strip of 3-family buildings. You pull the tax records, you see like one guy owns 4 of them, mail everybody else, get it under contract, sell that guy the 5th, the 4th. He owns 3 in the same property. He'll love to pick up another one, buy these for cheap, sell it to him. That's sort of what he taught how to multifamily best, but it was like 3 families and 6 families. And he's like, oh, you could do that on an 80 unit. No, you can't. It's so much harder. But
now we're seeing, I mean, when you guys look through your data sheets and whatnot, like if you see a 50+ unit, it's pretty rare to see personally owned. It's through, you have to pierce the LLC, and that's a whole other skill set to do that. But the mailing to, I'm going to say 80+ is rough. You don't get much.
No, it's a significant lower percentage. But even, we had a deal that came to us about a year ago at $16 or $15.5 million, the Orlando deal. Now people are trying to wholesaled other people's listings.
It was a daisy chain?
Daisy chain. It came to Chris at like $16 million.
Okay.
Then it was brought to me at like 15.5.
Well, what kept happening was he kept referring to, so somebody had it under contract and was basically looking to wholesale it through a broker.
Yep.
And he kept referring to the wholesaler as the seller.
Right.
And I was getting confused. It's like I forget exactly what it was, but the
buyer. He's like, the buyer wants to sell it.
Was it that?
Yeah. Because the seller, if he said the seller, you'd think it was the seller.
Yeah.
The true seller, the source seller.
He kept saying the buyer.
He kept saying the buyer. I'm like, what the fuck are you talking about?
The buyer.
And he's like, well, the buyer has I was like, oh, he wants to assign the deal. And he's like, yeah. I was like, why the
just tell me that. I would put it in my head. I would be able to put people in the buckets.
We just wasted 20 minutes because I have zero interest in this.
The other day, that same deal has now made its way back. And the price originally out of the box was like 16 million or 15.5 million.
Yeah.
The exact email was he wants 16, but we can get a deal done at like 15.5.
Yeah.
Plus 3.
And what was the number to you guys? Years ago?
So years ago. That was years ago.
Okay.
It was like 8 months ago. Wasn't
it? 8 months ago, basically a year. That same deal is now back on the table. And right after that, maybe like 2 or 3 months, it was brought to me at like 12.5 million. So we're already down $4 million. So she goes, well, what do you have it underwritten for? I think I can get it done cheaper. I was like, we have it underwritten 8 million. He'll do a deal at 10. I'm like, so you're trying to tell me this guy went from 16 million to 10. It's like, how many people were trying to mark that up? And lo and behold, I said, listen, we're not even at $8 million. And they came back the other day saying, he'd probably shake out somewhere in the 9. So just wait a couple more months and you'll get the real price. But it's a vacant building in Orlando, Florida.
Have you done a successful purchase of a daisy chain yet, or a wholesale?
Not a daisy chain, but a wholesale.
Okay.
And Kimberly.
Also, Jacksonville, kind of a wholesale.
Oh no, that was a really successful deal, and that went complete cycle already.
Yeah,
that was an assignment to you guys.
Yeah.
Okay.
Yeah,
so a guy called me because he thought that I was part of Urso's Jacksonville deal.
All right.
Tony. So he called me, and I was like, "Yeah, I'd love to buy it." So I gave it to him.
He bought it
because he bought Chris's deal.
Okay.
And then he called me and I said, yeah, sure, no problem. Talk to Chris. He's our, Let Hill underwriter. He's our Jacksonville guy. Sent it over. I almost blew up on Tony like 6 times because he was getting like, he had the property under contract. He made so much money on the wholesale. It was a ton of money. He must have made like $400,000.
I think so.
He made a $400,000 wholesale on me. Now
that's a success.
He did split that with
he split
one
that
or
with
two other
he split
people.
that with people.
Okay.
3 people.
But that deal we crushed it. We sold it in December.
Mm-hmm.
We did phenomenally on the deal, but we gave a $400,000 wholesale. Now that was a success, and we went wholesale, purchase, close, and we sold it. So we took a wholesale deal full cycle, and it was one of our best deals.
So I was actually, when we were talking about like, do you sell a deal or hold it longer? I was going to bring that up because Lisa was adamant that we should hold it because we had been turned that still weren't up to the
originals
turn units.
All right.
There was the turn / partially upgraded where they were heavy turns. So they were like $2,000 turns. So if you want to call them partial upgrades, you want to call them turns, whatever. And then there was I think like we did 14 like full upgrades, new cabinets, new counters, new appliances, everything. And there was like $100 spread over the middle. And then there was like probably that 40-60 spread over those handful of 40. So where can you get if you renovated everything and push rents over 2-3 years, you probably got what's $150-ish bucks more total on average that you could probably get it over 3 years. But that was the argument we kept coming back to. We talk about this in every property. It's if you renovate everything, who's your buyer?
Well, you haven't left any meat on the bone for the next buyer to do their thing.
Yeah, you're not gonna sell it at a 4 cap. You're gonna sell it at
exactly.
Who knows? Yeah. Like right now, like you don't know no one knows what a stable cap rate is anymore. Have you ever seen what a stable cap? What's every single deal is a value add deal, if there's value or not.
And that's right. A stable cap rate is, I think, affected a lot these days by what have you done to the capex of the building and the vintage.
Yes,
like you can we're seeing a lot of opportunity there on the stable cap rate stuff where you can. Whatever that means, like you said, is you can affect the cap rate by doing more work to the building the right way, but not just doing like, hey, we did the roofs. No, it's windows, it's seal and stripe.
Yeah, stuff you're not going to get a return on, except for
you're handing over a more stable, predictable product.
There's no more mistake. There's nothing. You do new windows.
Surprises.
There's no value there, right? Because typically tenants pay electric if there's electricity, energy, but they won't leak. So you won't have wood rot. Then you won't have to fix things to the next person.
Mm-hmm. Let the next buyer go in and say, all right, I have more stable capex cash flow that won't be leaking from capex.
Yeah, exactly.
And we can go do the units. You show a proof of concept of maybe 10 units and say, here, stable product, go do your rest.
Yeah, but you're also like resetting the switch, right?
True.
I think that in in Florida, like a third of the market has turned in the last 3 years. Or like the Carolinas, I don't know the number, but I'd be shocked if over 60% of the product hasn't changed hands in the last 3 years. So you're like resetting the table. Like, I'm going to buy this product that's already been renovated. I'm going to fix the stuff that nobody wants to fix.
Right.
I'll wait 5 years, 3 years, 5 years, whatever it is. Now my product is now a value add again because 5 years from now, 7 years from now, black appliances might not be a thing anymore. That might be like the white appliances of the day. So you're like resetting the table.
But new AC condensers are still great.
Exactly. I'll do that. I'll leave the black. I'll fix that because now I have, in the last 5 years, every AC's been changed.
Yes.
You don't have to spend $2,500, $20,000 fixing AC condensers and maybe taking them off the ceiling and putting them on the floor, taking them out, whatever. So like that's like how you reset the table for value add in the future. Maybe. I don't know, but we're looking at deals like that now. It's like, you know what? This deal is 1970s. Let's fix the bones.
Yep. We're
to
doing
make
that too.
it last another 70 years.
Yeah, reboot it. Totally reboot that sucker and have a different perception by the next owner. Because I do think it's going to start. It's not happening yet because there's a lot of cheap money out there. But the next buyer will start discounting the pre-1980 stuff hard.
Yeah, and I think that's what was done. I think 2013. 14, 15, where buyers, especially credible buyers that have been doing this for a while, were going in saying, I'll buy that for $12 a door because I'm going to replace all the air conditions. And the sellers at that point were like, you're right. You do have to replace the air conditions.
Right.
And they sold it. But now you offer $12 a door and you're left off it's like you go to brokers, you're like, well, 25% of the HVACs have to be replaced. They're like,
Right.
Some idiot's going to buy this and not replace them. But
We're getting pushback, but starting to educate brokers. I mean, you guys do it too. Like educate the brokers. Pre-1975, galvanized pipe, cast iron main lines underneath. They're starting to go. 50-year life. It's
Done.
over. And NOIs are going all over the place. Like replace those suckers. And they're like, replace the underground. Are you talking about the pipes in the units? No, the underground pipes. You got to drop $100,000 on that stuff.
yeah, because it's going to, it can't last forever.
And there is going to, like, the music stops one day.
Yes.
For like the pre-19 and even the 1980s, eventually that we're getting there, older and older and older. But the new buyers are going to be like, yeah, I gotta earmark $150,000 for the galvanized.
Mm-hmm.
Well, we just bought a 92 in Jacksonville. He did all new. He bought it, I think, vacant in like 2001. Did all new PVC pipe,
Nice.
the entire thing, all
Underground.
Nice.
New, yeah, all new windows, pitched the roofs.
Love it.
Fix some slabs, some concrete slabs.
He did like a ton of work. So when he came to us, it was a fair number, but we looked and we said, we don't have to worry about that.
Right.
We were like,
You're
this
almost
is-
like, well, let's pay a premium for it because it's like, or whatever. Like
we're
you
not
got, I
like
know,
that.
I know. But you know what
paid
you're getting.
What we would pay a premium for.
Yeah.
But no, we actually like the deal. Say, wow, a lot of the heavy, let's renovate every unit, refi, and hold it. Like this, like the first day we went in with that plan, we're already we closed on it, 18 hours ago. We're trying to flip it like, yeah, well, if we get 28 units done, we'll sell it. It's like, but we did at one point had a vision of holding it.
I still think we should because it's a 70s product that's never going to act like a 70s product because this guy bought it for, what was it, 92 units for
2001.
$900,000 in 2001.
He's refied it 3 times.
Yeah,
since
and he spent a
2001.
ton of money fixing things the right way, like we were just saying, that old owners do. Individual guy that owned it for 2018
So it was a flat roof and he pitched it.
in 2005.
Wow, that's cool.
Yeah, so it was like, that's the thing where we looked at it. We bought our 128 unit Whispering Oaks around the corner for 58. We bought that for 65 because we knew.
Yeah, but that's what I mean by premium. Like in an apples to apples, like you knew that you didn't have to put that work in, so you could just go right in and do the other things that you're not worried about. Like, oh, what's that freaking surprise on this pre-1975?
Yeah, no, that's the thing. We know, unless something comes up with PVC piping, and then we'll be in a very tight boat with everybody else. We don't have to worry about that.
No, yeah, a lot
for
of heavy
a
lifting is
long
done.
time. We don't really have to worry about the windows because we've had to do a little bit of caulking and stuff, but what's that? Nothing. We're doing new roofs because they're 20 years old, but now we're going to be good with roofs. Like it's set up that for now we have the flexibility to go 10 years if we want to refinance and hold.
Yes.
Or we can sell it to that next person that can do what they want with it and they won't have to worry about it either. I still think we should go 10 years because I really think in 2 or 3 years, we'll be able to pull out a ton of money because I think we're going to do really good upgrades and get a really nice push.
Right.
But, there's always money on the back end when you're a sponsor, not necessarily on the refinance. So be that as it may, I don't know if that's a conversation we necessarily want to get into right now. But what are you guys, so are you guys just ignoring pre-75?
No, we look for them.
Yeah.
I mean, there's so much flight to quality that when I said premium too, a lot of people are just paying way too much premium for 1980 because they are actually scared of that like 1975. Now, the numbers don't usually work out when you do the CapEx correctly, like we're talking about, because people are paying stupid prices anyway. So you're getting blown out just by, I need to do this correct work, so you can't get the deal. But a lot of times though, like we are seeing sometimes where we're not scared of 1975. I'm going to look at it and feel like I'm going to get rewarded from a cap rate in the future by doing it. Because people are like, why are you spending the money when it doesn't have the instant ROI? Because people are just paying attention to unit turns and top line.
Yeah.
We're paying attention to cap rate compression by banks.
Yeah.
Rewarding you for doing the CapEx that people aren't doing.
We're having that fight on a bank right now. It's just the PCA came back. You got to fix so many things. So guys, that's what our capital budget is. Our whole capital budget is fixing these problems.
Right.
Like, so why are you penalizing me? It's here. Look, I have a $2 million budget. $1.5 million of it's going to fix HVACs, to fix this, to fix that. Why are you penalizing me? Why can't you just, I don't get it.
Because that's below the line.
Yeah. And it's not going to have an immediate impact, but it does because you have less maintenance calls.
Yes.
So you have a better you have a better presence in the market. People want to live there.
That's right.
They'll stay there. They'll renew their leases. Like that does it in a different way
Your maintenance guy can go spend time on other things.
Yes, stuff that's important, as opposed to just going in there and trying to, fix another HVAC because it's 25 years old.
And for investors, it does create more predictable cash flow. It doesn't create predictable NOI because it's below the line, but it creates predictable cash flow.
Yeah, you don't have the arguments on a monthly basis, like another 8 HVACs, and it's like, okay, we have no cash flow again. That doesn't happen when you fix that stuff. But the bank's penalizing us because you're not seeing just crazy growth up here.
They penalize you in the beginning, but they reward you on the refi.
Yeah.
Because you did it already.
Yes. When you refinance it, if you refinance it or when you sell it, the next guy should take that into consideration. Jackson, we do it almost all the time. We replaced, it's like right out of the box, 25% of the HVACs because that's a major cost to the bottom line to an operator.
And you usually get through about, it's a guesstimate, but around 2 years of not having to worry about that coming from another place.
Correct.
Not on all of them. No, but I think part of it too is it's like you said, people are hiding behind spreadsheets. I think it goes back to there's more to it than just like the calculable thing where you're talking about not only maintenance guys. It's, if you've ever lived in an apartment or a house that has shitty upkeep, you leave. So
yes.
Now it's okay. Now can you project lower turnover? No, but you're probably going to have lower turnover
and a bad review.
Yeah.
And now you have reputation management problems.
Exactly. Now you've got to spend money on fake reviews, which is, I think, bananas.
That's silly.
But then it's also, too, it's like if you live in the area, other people that live there, they're either going to tell you to come live here or not. It's more going to be not come live here. People don't be like, oh, my building has no problems.
My 1960s building in a C-class location is awesome.
Yeah. No, but if you've got, the thing about it, if you had a family member who's living in another apartment and it's, every night the alarms go off, or there's there's fucking
it takes
noise.
3 weeks to get
ACs are always off.
Done.
They're gonna leave and they're gonna go, God, my building sucks. And while you're at that family party, somebody's gonna go, oh, I never have that problem. My building's great. And they're gonna go, oh, what are you paying?
Right.
But that's part of something that's like you can't calculate that. That's not something that you can look at and say whatever. But you just do right by people. That stuff is going to come back to you in one way or another, whether it's freeing up your maintenance guys' time, whether it's freeing up your leasing agent's time, whether it's lowering turnover, whether it's lowering your bottom line CapEx, or even just less fucking headaches.
Well,
right? Like from our side, like just not having to worry about, oh, we've got to replace HVAC. It's not having to worry about roofs for the next 20 years.
And you have a warranty on your ACs when you do them new.
Yeah, but there's other like our deal in Columbus, Hartford is the perfect example.
Yeah.
I went into the units, one of our investors, after we renovated some, and he's like, oh, this is gorgeous. I'm sitting there like I was almost embarrassed because I had a vision of we're going to turn this whole property into something great, and it doesn't warrant it. So we go into it with one of our investors, and he's like, this is amazing. This is great living. And I'm like, oh, this looks like shit. But we're doing... we're converting everything from gas to electric so we don't have to pay that cost. And it's a major cost. We're doing this stuff on the exterior that I push for on every deal. It's like, paint it, do this, change the windows, change the doors.
Yes.
That's the stuff that you can't say, oh, we're going to change the doors.
That's outside in.
Yeah, we're going to change the doors and get a 25% rent bump. It doesn't work that way, but inevitably it's totally visually maintenance. It's better. And
that's
I like
that's
that
the art.
better.
That's improving the show trail. So if you have 100 people that show up that are potential residents, you didn't realize that if you didn't do that work, you lost 50 of them.
Correct. And
they just walked away. You didn't even know it.
Yep. Yeah. So one of the investors on the phone with today goes, are you an inside out guy or an outside in guy? I'm like, who the fuck is an inside out guy? I said, you're going to take a property that's shit, renovate the interiors and try and get a higher rent when the exterior looks like shit. He's like,
they already canceled you before they even give the inside a chance.
I said, I never even, who an inside, I want to know who out there is telling people to do the insides. Well, what if you have vacancy? I'm like, that's even more so to do the exterior so people can see it's changed.
Yeah. Well, when I was in Jacksonville yesterday and brought our investor by the deal we're closing, and we went to one of the comps that we offered on. Guy bought it and he's just completely, it needed it, but he's redoing the entire thing. But he just started painting all the exteriors. And we went to a renovated unit and we asked, what the price was, like $1,100. We're like, $1,100? And she's like, yeah, well, it's, not everything's done yet. And it's like, there's a discount for going through that, whether you want to call it construction or lease up, whatever, whether it's a, ground up development or whether it's you're renovating, the exterior stuff. Can't charge people full price until it's done.
Sure.
So how are you going to do an inside, expect to get a full rental rate until you do the outside work to justify the inside? Now, if you're just doing a a partial upgrade. You don't need as much, but they're taking old 1980s classic units to Class A granite stainless vinyl stuff.
I'm intrigued to see how that deal turns out because I love that property.
I really wish we would have bought
Well,
it.
you could probably do 3D walkthroughs too if you really wanted to try to do a show trail that didn't have the exterior done. This is what it's going to look like.
So that stuff I'm always interested about is like how much like consumer behavior from the tenant side. I feel like at least maybe it's out there and I just don't know it. But like the map of what people do, because we were talking about it. We were in Jacksonville one time and we were at the airport. There was a young woman on, I think it was rent.com looking at apartments. We just watched her for 45
Yeah, it was a
minutes.
little creepy.
cool.
I was looking over.
Oh,
her
you were looking
shoulder.
over. What is she doing? Where's she going?
she was on
What's she
a laptop.
typing in?
She completely went over our property.
Yeah, no, she was scrolling and she's like,
No.
nope.
You're like,
I was like, I got on the phone. I was like, pick that one. I called my property manager. I'm like, what the fuck?
yeah.
But like,
Better pictures.
but like that whole funnel to me is like
No, it's
very
true.
interesting, and there's not, at least nothing I've come across, and it could be out there. Like I said, it's not like I've searched for hours about this. It's just been in the back.
No,
of my
it's
head
it's the
lately.
best operators that are being thoughtful about this stuff.
And that was
That's
like
consumer
that was like
behavior.
live action though, because she was literally scrolling over our properties and going to our comps.
Yeah,
Yeah,
And I was like, motherfucker, like, you gotta be kidding me. I wanted to tap and be like, no,
Right.
I'm telling you, you're gonna like that.
but you gotta think about like poppy pictures.
Yeah.
I mean, and you do have to think about. I mean, you can even look at website tracking and like heat maps and behavior flow.
yeah. Well, that's part of what I was talking about. But I got into an argument with Lisa about this. Of we need to get a photo of an upgraded unit up and the new
Yes.
signage. We want to wait until March to do the full photo shoot because that's when the landscape can come out. That's when everything will be done.
I get it.
I said, but we've got a 2-3 month window
Just
where
get
we're not
people-
getting
right.
we're not getting people in. They don't know about our. We haven't leased a renovated unit at
Right.
one property for 4 months.
And not everybody's looking for the next month. You could get people warm to 2 to 3 months from now.
Yeah,
Because if they start looking when they want to rent it, they're gonna go to the first place they need to rent.
yeah.
If they start today for 2 months and they come across it, they're like, oh.
Right, they might
check that
save it. Like,
and the good thing about that, like from our manager standpoint, to give her some credit, because she's getting beat up a little bit right now.
She gets,
and you guys speak very highly of her.
Yeah, no, she's getting beat up right now. But she's like, well, they're gonna charge us like $600 to do like a photo shoot. I'm like, and it's like 300 unit property. I'm like, that's okay. Do 18 photo shoots. I don't care. But she is watching the bank. But at the same time,
No, she's trying to maximize our dollars, which is
Yes, that's
what
her
you
job.
want. And
Yeah.
it's my job to push back and
Yes.
say, hey, we need to do this. So I'm not shitting on her. I'm just saying, this was an example of, it was going a long time at this one property where we did a beautiful unit. Like the unit is gorgeous. They did a phenomenal job
yeah, sure.
on the interior of this unit. And we had 4 applications that got denied over a 4-month period. And I was like,
Because
we've
there's got to be more. There's got to be more people that are interested in right.
It's not pricing. It's not the location. It's not
Right.
any of that. Because
It's
there's ton of-
marketing. It's marketing.
This property's been they bought it out of receivership 5 years ago.
Mhm.
She managed it prior to,
Right.
and they did a phenomenal job of leasing it up, getting it stabled, getting it occupied, and running the property for the previous owner. But it's had that reputation for 5 years now. So it's like, okay, we've got to do the job of changing that.
You got to kickstart it and you have to
Exactly.
market the new branding.
Exactly.
And I understand you're holding back from like let's wait until there's the big pop, but
Yeah.
you can do it in a way that's like little teasers here and there.
Exactly. And that's,
Yes.
that's the conversation we were having. And it was, we did it, with the renovated unit, and we just tried to upsell people, and it wasn't enough for that property. There's other properties they do beautifully at where we don't have photos of upgraded units, and like Whispering Oaks, they're churning over full upgrades where it's working phenomenally.
You get the report today.
Did I? Which
87% pre-leased.
yeah, that's
Awesome.
We were like 96, 97.
Oh, you were.
It's
That
like,
property's
she
up
says
and
all the
down
time, she
all the
says these 2 months are horrible. December, January always dropped to like the high 80s, low 90s, and then
back up to 90.
How
in
many, how
February.
many do you have that you need to lease up? Like, how many are
It's
waiting?
124
Oh,
units.
all right.
128.
128. So
Oh, you've noticed the vacates that you need to get in?
yeah. So she'll have like the pre-lease, but next week I'm sure like tax return when people get their money back,
Yeah.
that'll pop
That's
right back
that's
up
what
into
they're
the
waiting
90s.
for too, is the tax returns, which is crazy to me that people are waiting for tax.
No, we see that cycle across all our portfolio.
It's insane.
Yeah. No, I get it, but that's the other side too, where I was going to go too, is like the consumer behavior of not only, and that's not what I got confused, but tenants, but I was also going to say consumer behavior too of like I'm thinking about a lot now is like the investor side of things too. Basically, we're middlemen between two different clients. If you think about it, right?
Yeah, but this is asset management. This is what you're talking about of asset management.
Yeah, that's your job.
Right.
But when people say, well, how do you like the question I got today was, what red flags do you see? It's like, well, that's your job. It's to catch red flags before they become red flags. You want to catch like, wait, let's change this before our occupancy drops to 70, or let's do this.
Right.
That's our role. Those are the good syndicator, sponsor, asset manager. That's the difference between the good ones and the bad. The bad ones just sit back and take money from people and charge fees.
And then the mediocre ones are just reactive. Yes. And then the good ones like us are proactive, talking about things like this. Like, let's do a marketing campaign that talks about tax returns, or knowing that there is a frequency where this is the time everybody's moving. Let's get in front.
We said all the time, even on our Spring Park Place, our deals, it's like, we need renovated units for this time because we know we're going to get an influx. So let's not wait till people start knocking on the doors. Yeah. Let's make sure it's done so when they knock on the doors, we can accommodate it. But that's understanding all of it.
And capturing your some of the residents that come in and maybe decided not to rent, or that we're saying, hey, I'm only moving in 2 months from now, but having some sort of lead collector that you can then go and do email blast to them or text messaging and just say, hey, did you ever move in?
Yep.
Like, there's that kind of proactivity that you can use all the technological tools out there.
That's something that I think I'm curious how it's going to go, because you see it a lot in Class A stuff where it's like social media ads, text messaging, like automated follow-up emails. Like, I know enough that I'll sign up for stuff and I can recognize like whether it's a person, automated or whatever. Where I think
never a person.
There are some. Like I signed up for 3 in Jackson when we were doing a comp, and like I could tell 2 were automated because it was like clockwork. It was at like 8 a.m. and it was just like clearly whatever. But it was great. There was one property, they sent out 10 emails in a week and a half. And I was like, wow, that's phenomenal. And then there was one, I got 1 follow-up email, but I was like, this is clearly a person just the way it was. So I think it'll be really interesting to see how that technology continues to funnel down into some of the leasing stuff. Because I think a lot of that is...
We tell our leasing managers to, when appointments come in and booked on the calendar, the day before and then the day of, they call up, make sure they're coming, and then text message follow-ups. To get them. That's how you convert to shows more.
Yeah, the trickle down from the A stuff. That's why the C class space and the B class space sort of fails. Like you don't get the A trickle down because people take that approach like, oh, no, this is not going to work here, and not necessarily us, but at the management level. And it's like that's like
you can deploy this at the B and C class asset level.
I think it would, and I don't know if we're doing it in certain cases or not, but that's where that's my biggest complaint daily is it's like, I know they're not doing what they should be doing, but there's no way I can monitor it 100%.
Well, it's just being thoughtful about, and we're not perfect at it, but we're pushing constantly with thoughtfulness to improve on it.
Well, yeah. What did we say the other day on last Wednesday on the call? I said, if you guys need us internally in our office to help with the leads, we are here. That's our job. I'm not saying you're not doing it, but I'm saying you're not doing it. I'm saying let us help you.
Right.
And like what I say in the car the other day, I said, I want to spot test them. I'm going to post 2 ads on Craigslist.
Totally.
See how many calls I get.
Call some of the ones that didn't convert to leases and say, why didn't you end up going with us?
Yes.
And just do like, it's customer service. And it's like, and surveys like, oh, well, the tour wasn't really all that awesome. And you're like, really? Oh. Yes, now let's work on that part. Let's work on the tour, salesmanship.
Well, we're selling a deal, and the broker that's selling our deal, like I have pictures. He's like, look, there was a U-Haul parked in the middle of the grass. And he's like, this clearly is someone that was moving and did not want to walk, and it was raining, so now we have tire tracks through the front lawn on a deal we're trying to sell.
Yeah.
So I get the picture, and I call the manager. I'm like, the fuck is this? She's like, I didn't even notice that. I'm like,
nothing says community like mud tracks.
But like he would send me pictures of shit like that. And I sit there like, you got to be kidding me. But like that's the stuff that you're never going to have control over unless you have someone physically there, because you get called and follow up and then you call your man. You're like, wait a second, you guys never called this person back. And stuff will fall through the cracks. It's just if it's ongoing every single month, then something's got to change.
Yeah, no, I think it's tough, right? Because you also sit here up in an office in New York and you're like, why isn't everything getting done perfectly every time in our properties in there? So it's like, you always try to balance like, okay, how high of an expectation can you realistically have, right? Like how much can our managers actually do on a day-to-day basis. But also, yeah, by the way, they've also, got to run the property as well.
Well, you just have to be. We have to be self-aware too, and ask ourselves: did we explain it correctly to them?
Yeah, correct.
Like, are we just being jerks and we just like delegated it like a jerk and was like we said it quickly. We thought they understood. They didn't really, and then they didn't do it. So we have to just be self-aware and be like, maybe they need a little more guidance. But when you feel like guidance has been given correctly, I mean, then you have to be harsh. Like, we have explained this. You have a standard operating procedure. It should be pretty easy to follow. Like infractions or whatever. Like, this isn't going to work out if it keeps on happening.
I think it's definitely interesting. What because you're in, we got time. You're in the tech space. Is there anything that you've seen over the last year or two that you think would be very beneficial for anybody that owns any sort of multifamily, but especially B and C class stuff, that you should be like, hey, go check this out. I think it could help you guys.
We have been using Slack as communication tool with our on-site property management team.
Yeah, we just had this conversation.
There are channels. There's a green light like that you can see when somebody's there. I'm on Slack all day. If somebody needs to have a question to the owner to get a response that can solve a bumper bowling situation, because bad things happen sometimes when an owner doesn't respond back quickly. I'm always there, so there's no excuse, and we expect that from our on-site teams. We are slacking them constantly, but not constantly to the point where then they're pissed and not able to do their job.
No, I think it's too so we've started using Monday.com for just our internal task stuff, and I think it's been going well, relatively speaking.
We use something similar, Trello.
Okay,
similar.
Yeah, we tried Trello.
We tried it. I did not aid at all in the implementation of Trello. It was Chris let's use this, and he was doing things, and I'm like, yo, fuck that. It's another website I got to open. No shot. Yeah. That was 100% on me.
Yeah, I tapered off too, so it is what it is. But it's a couple times now I've heard. I know what Slack is. I've never really used it.
We tried it
for a lot. What did we use? No, we used it when my mom and Anthony were still doing things. But it was we just stopped needing it because they both stopped.
They stopped. I'm also like, text me. We spoke about this the other day.
Just stopped. The communication wasn't needed for that deal anymore, really, because they stopped being involved as much, and it was you and me. We're in the office all day.
We were with each other, so it was we'd have something pop up, and we were sitting next to each other. I'm like, it really makes no sense for me to write this there, because I could just tell him, or he could tell me, but. Sure. But my biggest a lot of our managers, we have two really, it's an old dog, new tricks. How do you get your team to do it? Because
whack-a-mole, frustration management. Yeah.
Because if we tried that, they would be no shot. It would take months.
You have to do it gradually. It wasn't, I'm not saying that we said Slack and the next day it was tech bros all day. It was, it was a lot of why aren't you using that? You haven't logged in a week. What's going on? And then it's people get embarrassed too about their lack of tech knowledge. And it's I forgot my password. I don't know how to log in. You press forgot password. No, but I'm being serious. There's these things that you have to navigate, but that's where you have to be gentle.
Yeah. I think I struggle with that a lot is I am fairly tech savvy, and if I don't, I'm very good at figuring things out. The best example is the fucking podcast stuff. He looks at me like,
this shit.
Did you figure it out?
There'd be no podcast without you figuring it out.
No podcast, absolutely. I have a thing I have to do in April for a guy. It's a show that one of my buddies introduced me to. And he's like, you have to have a quiet room. You have to set that up. So I was like, yeah, you're doing it. Because this is foreign to me. I'm not bad with technology. I play stupid, but you could figure it out and it's not that hard.
But there's varying levels.
Yes.
Where I was going with that is I think I struggle to realize that most people are not even close, and there's a lot of people that don't really understand it.
Yes.
But I also see my 90-year-old grandma, I call her Oma because she's from Germany. I've watched her the past 5 years learn how to use Facebook on a tablet. She calls the tablet Facebook, which is hysterical. She said, I'm going to use the Facebook. It's phenomenal. I don't know if she'd be listening, but I love you. But it's crazy to see that. But it's it has taken her a tremendous amount of time. She's, in the grand scheme of things, picked up very little compared to someone like me or like you or, sitting here. And then it's, with Don, it's, somewhere in the middle where he has a fairly good grasp of technology, but a lot of his investors are even older. So it's he's very cognizant of them being able to use this. And definitely for me, you to a lesser degree, it's like, don't worry about it. Just send it to them. They'll figure it out. And I think he gets it more of like, hey, maybe they will, but there's a good shot they won't. So let's make sure they don't have trouble, because where you're just saying where maybe people don't want to admit that they can't figure it out.
Yes.
You don't want to create that barrier for now your client, your investor. So it's definitely something I 100% struggle with, of being like, you know, this is Slack. Like, it's easy, pick it up, go.
Yeah, but Slack doesn't have to be the like the thing that makes everything right. It's like for the investor, Slack is not with us and the investor. Slack is for like our communication to third party management.
Right. I know Slack with investor,
but like for technology with investors, in that example you give, I can think of one that's interesting is like just send it to them, but at the same time, you send a PPM, they're going to be like, I got to print this out and sign it. We do go through the headaches of digitizing it and making it digital signs.
Yeah.
Well, that's we've done that. Fully implemented that with with all our investors. But that's the thing where we send it through our back. That's what I was referring to. Send it through the back office, and it was how do I give them their login information that you were just talking about?
Oh, sure.
Said, just tell them they forgot password. He's like, how do they know what email to use? It's the email you send it to them on. And it's like,
well, that is process where I mean, that would have to be a manual process too, where you'd have to like, hey, this is your, like on the email that I just sent to you, use this email, click this link.
That's what he wanted to do. And I guess it's interesting now that we've had the conversation literally only a week, not even a week later from when we were going back and forth on that. And I think to, you know, my detriment, it was like, why are you bothering? Like, they'll figure it out. And I think he understands it better, probably because one, he's just older, and two, he's been an adult through the technology revolution. And I basically grew up with it. I mean, I was a kid when, you know, the internet came around and dial up and all that stuff. So, you know, I wasn't the kid on the smartphone, but I was the kid on, you know, technology and the internet. And it's tough. It's very tough for me to understand what it was like. Back to our conversation of what was it like, you know, what was multifamily like 10, 15 years ago?
This wasn't even there. Like,
15 years ago, I was 13 years old. I mean, you know,
that's one thing I wish a lot of things, but I wish I would have been a lot smarter and like did technology stuff, because there's so much you can do in that space.
Yeah, but John, you're double downing on the stuff that you're good at. Like, you're good at finding deals, creating relationships. Yeah. So it's like you're good at technology. You can bridge the gap. You can get thoughtful
I'm also
together.
Super stubborn. So like the other day, I text my brother. I'm like, yeah, we gotta buy a book on like this. And he's like, you mean watch YouTube videos on how to do it? I'm like, fuck no. Like, I will absolutely, I won't do it.
I stubborn to a fault.
I get
it the wrong way.
I'll dig my heel in. But the other day, like, I was like, all right, let's watch a YouTube video. I'm like trying to like build my basement. I go like, instead of like, oh, let's watch a YouTube video on how to like send a text message. I'm like, you know, finishing a basement on YouTube. That's not going to work either. But
a basement for dummies.
Yeah. But I literally text him like, yo, we need a book on e-commerce. He's like, book on and he's only 2 years younger than me. He's like, you mean you want to watch a video on how to do something online? I'm like, yeah, okay, you can do that too, but
but I do think that this is the area where technology is starting to, I hate this word though, it's like disrupt, but like because it hasn't been adopted fully in all the areas.
Real estate, you know, real estate in general is such an antiquated, non-technological.
And on the big stuff, it's surprising. Like, we're in big deals, and you're like, this is like a $15 million deal, and I'm looking at notes, and this is how they talked about how they're tracking management. You're like, whoa.
When we were in Jacksonville, and it's crazy, and they've moved almost everything to digital. So again, to their credit, not shitting on them. And this isn't shitting on them. It was just funny. Our one office at Whispering is a full unit, but it's split in a back and a front, and it just feels tight.
Okay.
So we said, why don't we open it up? She's like, well, we still need a space for the filing cabinet because
and you're
it needs to be behind a closed door. I'm like, a filing cabinet? I was like, this thing? She's like, yeah. She's like, and
you're like, scan it. Scan it and digitize it, and then we don't have that problem.
We might actually be able to get rid of it because we moved everything digital. I still personally like a lot of paper backups just in case, but it was just an interesting conversation where it was like, that's still there. It's not fully, everything's not fully digital. Even the property we're taking over, all of our properties now use all of our maintenance stuff through like iPads, and they carry it around.
Yeah, they take right. You get a report of what they're
and everything's through it. So they've done a phenomenal job of integrating that over the last 2.5-3 years. Property we're taking over doesn't do that, and we've got a really old timer type maintenance guy who's
That's
phenomenal. He's been there for 14
right.
years.
But this might be a leap to get them there.
We're curious of like, how is that? It's always a a thought in our mind. Like, how is he going to handle being able to integrate this aspect of it? Because he does a great job from the outside looking in. You never know until you take over how well he does, but he seems to do a good job. He's got tremendous knowledge of the property, but it's like, okay, now you're changing up how he's done things for, I don't know, 30 years probably.
Right.
Maybe.
You have to find out, is he rocking flip phone style? Like, can he even text message?
That's the guy that built out the office. In other words, he's got a flip phone.
Yeah, that's awesome. But like, that's, it's tough because those things take time.
But real estate in general, I mean, I remember the first property I ever walked, I walked with literally like 100 pieces of paper, and I'm going through units with pencils. Then I did due diligence with a professional company, and they're going through with pencils. Then the next time we did due diligence with that same company a year later, they got like 16 iPads and 14 walk teams. I'm like, oh my God, I had a backpack with pencils to go through 240 units of like, how's the HVAC? And then like the people ask me, what do you use for due diligence? I'm like trying to find a file to send to them, but I'm like, they literally walk through it on an iPad, take pictures of everything, and then you get a 200-page book, and it's like, these are the bad HVACs, these are the good. But real estate is that business. It's so not in the 21st century.
But then also people say the word tech, and then they go, isn't tech supposed to solve all of my problems? And even the ones that are super tech, I'm thinking of things that even super tech property managers just don't do. It's not part of their process. Like, okay, you switch out an existing tenant's appliances, mark down which units are getting new appliances and how long the warranty is going to be. Because what ends up happening is like you end up fixing stuff sometimes. And it's like, why are we fixing this and making a bill? It's on a warranty.
Yep, so that's a bigger frustration. I said, like, here's a reno tracker and it has that stuff listed. You think I'd be sending them Chinese hieroglyphics? They're like,
because these are huge costs. Like appliances right now are rocking out like $1,200 to do everything. So like, yeah, you all of a sudden are getting $300 bills for like fixing out. Then new units do have problems, and it's like, why are we having these bills?
So Mike is awesome at that. Like he's like, whoa, don't touch that. That's under warranty. But like those are little things over some people's head. And, $300 here or there. It's not malicious property management theft.
No, they're actually trying to fix it fast.
They're trying to get it done, but it's like, no. Buy two extra refrigerators, throw them in a maintenance shed, and then when that one breaks, take it out, replace it, go put this one back in the warranty.
Tech is not going to solve that. The only thing that tech does is if it allows you to capture it, and then process actually allows you to look at what you captured and act upon it.
Yep.
That's interesting. Let's wrap it there because we are coming up on time, and I think that was a ton of great stuff and a great place to kind of naturally call it. Chris, thanks so much for coming on, man. This was really, really awesome. I think people are going to get a ton of stuff out of it. If anybody wants to get in touch with you, learn more about you, hear more stuff you got to say, where can they do that?
You can find me online at sharplineequity.com. I'm on Facebook, multifamilyunveiled.com, private Facebook group, and then LinkedIn, Chris Jackson, Sharpline.
Awesome. We'll put that all in the show notes. Thanks again for coming on. This is awesome.
Thank you.
And we're definitely doing a round 2.
Yes. Cool.
Cool, guys. That was awesome.